Today, we explore the latest developments in global geopolitics and economics that are shaping our world. From significant cryptocurrency movements to major regulatory changes, these stories impact millions. Here are today's top 10 stories you need to know. In a significant move for institutional cryptocurrency adoption, Bullish, a cryptocurrency exchange, announced its acquisition of Equiniti for $4.2 billion. This strategic acquisition aims to bridge blockchain technology with traditional capital markets. Bullish's CEO, Thomas Farley, emphasized the importance of establishing a regulated transfer agent to facilitate this transition. The deal includes approximately $1.85 billion in assumed debt and $2.35 billion in Bullish stock. Farley's vision highlights tokenization as a transformative force in capital markets. By integrating Equiniti's capabilities, Bullish seeks to enhance its operations and provide the necessary infrastructure for large-scale cryptocurrency transactions. This acquisition marks an essential step in merging the worlds of traditional finance and blockchain technology. As regulatory frameworks evolve, the industry is poised for substantial growth. Investors and market participants are closely watching how this acquisition will influence institutional interest in cryptocurrencies moving forward. As the cryptocurrency market continues to evolve, Ethereum's price prediction is garnering attention, with projections eyeing $10,000. Factors contributing to this bullish outlook include sustained institutional demand and the growing popularity of decentralized finance applications. Market analysts suggest that Ethereum's role as a leading smart contract platform positions it favorably amid increasing adoption rates. The upcoming Ethereum 2.0 upgrade is also anticipated to enhance its scalability and efficiency, further boosting investor confidence. As more institutions integrate Ethereum into their portfolios, the cryptocurrency's price trajectory will likely reflect this growing acceptance. The ongoing developments in the Ethereum ecosystem, including advancements in Layer 2 solutions, are expected to drive user engagement and transaction volumes. This momentum could ultimately lead to significant price increases as we approach the latter half of the year. Investors are advised to keep a close eye on market trends and potential regulatory developments that may influence Ethereum's performance. In recent crypto news, the AlphaPepe presale has successfully raised over $1.1 million, demonstrating strong investor interest. The presale, now in stage 15, is pivotal for the project's upcoming launch. With more than 8,300 holders already, AlphaPepe is positioning itself for a significant market entry. The project's developers are keen on ensuring security and transparency as they have completed an audit ahead of the exchange debut. As the cryptocurrency market continues to grow, presales like AlphaPepe's could indicate an increase in investor confidence. The anticipation surrounding this project reflects broader trends in the crypto space, where innovative projects attract significant funding. Market participants are eager to see how AlphaPepe performs once it transitions to trading on exchanges. This presale success could set a precedent for future projects aiming to tap into the burgeoning crypto market. Bitcoin's price prediction has sparked renewed optimism among investors, with projections indicating it could soar to $250,000. This bullish sentiment is largely attributed to increasing institutional adoption and a growing interest in Bitcoin exchange-traded funds, which provide easier access for traditional investors. Historically, Bitcoin has demonstrated a cyclical pattern of significant price surges every 4 years, driven primarily by its halving events. As the market gears up for the next halving, many analysts believe Bitcoin is poised for another major rally. The evolving global economic landscape, characterized by inflationary pressures and uncertain monetary policies, is also influencing investor behavior. Furthermore, regulatory developments are shaping the environment for cryptocurrencies, with many countries beginning to embrace digital assets. This growing acceptance reinforces Bitcoin's legitimacy as a viable asset class, attracting substantial institutional investments. Looking ahead, Bitcoin's performance in the next few months will be crucial in determining its future trajectory and solidifying its status within the broader financial ecosystem. Recent regulatory developments are reshaping the cryptocurrency landscape, with new frameworks being introduced to govern digital assets. These changes come in response to the rapid growth of cryptocurrencies, which have drawn both interest and concern from investors and regulators alike. Governments worldwide are recognizing the critical need for regulations to legitimize and protect investors in this evolving digital asset space. By establishing clearer guidelines, the potential for widespread adoption increases as users gain confidence in the system. These measures aim to mitigate risks associated with fraud and market manipulation, fostering a more stable environment for both retail and institutional investors. The impact of such regulations could lead to increased institutional participation in the market as firms seek compliant avenues for investment and innovation. Stakeholders must stay informed about these regulatory shifts as they could significantly influence market dynamics. Looking ahead, the ongoing dialogue between regulators and industry leaders will be pivotal in determining the long-term viability and growth of cryptocurrencies. The AlphaPepe presale continues to gain remarkable momentum, with funds surpassing $1.1 million raised in just a few weeks. This surge highlights a burgeoning interest in innovative cryptocurrency projects, particularly those that effectively engage their communities. As the presale progresses through its various stages, it has attracted over 8,300 holders, reflecting growing confidence in the project's long-term viability. Analysts suggest that the presale's success can be attributed to its strong community engagement and well-defined roadmap, which outlines significant milestones. Investors are particularly enthusiastic about the upcoming launch and its potential to disrupt the market. With a completed audit and a demonstration of the AlphaSwap AI DEX, AlphaPepe is positioning itself as a serious contender in the highly competitive crypto landscape. This enthusiasm mirrors broader trends in the industry, where new projects rapidly gain traction amid increasing market interest. Market observers are closely monitoring this presale as an indicator of evolving investor sentiment and potential future developments in the cryptocurrency sector, particularly as AlphaPepe aims for a successful launch next quarter. The demand for Bitcoin exchange-traded funds, or ETFs, is surging as a growing number of investors seek regulated avenues to gain exposure to cryptocurrencies. This shift reflects a broader trend in the financial landscape, where traditional investors are increasingly recognizing the potential of digital assets. Analysts forecast that the approval of new Bitcoin ETFs could significantly alter market dynamics, potentially stabilizing prices and increasing liquidity. Institutional interest is a key driver behind this trend, as firms are eager for compliant investment options in the evolving digital asset space. The anticipated influx of capital into Bitcoin ETFs could create a wave of optimism among retail investors, further fueling market enthusiasm. As regulatory bodies meticulously review applications for these financial products, their decisions will likely have profound implications for Bitcoin's price trajectory and adoption rates. The rise in Bitcoin ETF demand signifies a pivotal moment for the integration of digital assets into mainstream finance. Investors should remain vigilant, as the launch of new ETFs could herald a transformative era for institutional participation in the cryptocurrency market. Institutional adoption of cryptocurrencies is rapidly accelerating, with major financial institutions integrating digital assets into their operations. This shift is primarily driven by a desire to diversify portfolios and capitalize on the significant growth potential of the crypto market. According to recent surveys, a substantial percentage of institutional investors are either considering or have already made investments in cryptocurrencies. This growing interest signals a shift in traditional finance, where digital assets are being recognized as a viable asset class. As firms navigate the complexities of digital asset investments, regulatory clarity becomes essential. Institutional players are actively seeking compliant investment vehicles to mitigate risks associated with market volatility and compliance issues. The increasing acceptance of cryptocurrencies is reshaping investment strategies across the financial sector, prompting traditional asset managers to adapt to this new reality. As this trend continues, the influence of institutional investors on the cryptocurrency market is likely to expand, potentially leading to more stable price movements. Analysts expect that this institutional momentum could pave the way for innovative financial products, fundamentally altering the landscape of investment in the coming years. Amidst the ongoing uncertainty in global markets, cryptocurrency volatility remains a key concern for investors. Recent fluctuations in prices have raised alarms about potential market manipulation and the influence of external economic factors on digital assets. This volatility has been exacerbated by macroeconomic indicators such as inflation rates and interest hikes, which have historically impacted investor behavior. Analysts are closely monitoring these developments as they could significantly affect investor sentiment and risk appetite. The correlation between cryptocurrency prices and traditional financial markets has become increasingly evident, leading to questions about the future trajectory of digital assets. As trading volumes fluctuate, market participants are advised to remain cautious and informed given the unpredictable nature of the crypto space. The emergence of regulatory measures aimed at stabilizing the market could play a significant role in shaping future trends, fostering a more secure environment for investors. Increased scrutiny from governments worldwide indicates a growing recognition of the need for stability in this rapidly evolving sector. As regulatory frameworks evolve, they may provide clarity and potentially mitigate volatility. Looking ahead, investors should prepare for a landscape where compliance and regulation could redefine the dynamics of cryptocurrency trading, ultimately influencing market confidence and participation. In a pivotal moment for the cryptocurrency industry, a significant shift in regulations is taking place, impacting how digital assets are governed globally. Regulatory bodies across various countries are implementing new frameworks designed to enhance security and transparency within the market. This change is largely in response to growing concerns over investor protection, as numerous high-profile fraud cases and market volatility have raised alarms among consumers and regulators alike. By establishing clearer guidelines, authorities aim to mitigate risks associated with fraud and market manipulation while fostering a more stable environment for cryptocurrency transactions. The response from the industry has been mixed. While some stakeholders welcome the increased oversight as a necessary step towards legitimacy, others fear that stringent regulations may stifle innovation and hinder the growth of emerging technologies. As governments continue to refine their approaches, the implications for cryptocurrency exchanges and investors are profound. Greater regulatory clarity could pave the way for increased institutional involvement, leading to broader acceptance of digital currencies in mainstream finance. Market participants are urged to stay informed about these developments, as they will significantly shape the future landscape of cryptocurrencies. Looking ahead, the ongoing evolution of regulations could redefine the competitive dynamics of the financial sector, prompting traditional institutions to adapt and innovate in response to the rise of digital assets. Thank you for joining us today. Which story shocked you the most? Don't forget to like and subscribe for more updates.